What I have here on screen is a question that has a lot of adjustments that have to do with trading stock and ultimately trading stock deficit. You had to make some adjustments to the trading stock amount before you could calculate the trading stock deficit. Let us look at the information that we have and see how we handle these adjustments. Adjustment that affects trading stock is adjustment number 3, and we are told that a robbery took place and 6,000 was stolen from the cash register, as well as 20,000 worth of stock. Stock is insured under the following clause. Stock lost to the value of 50,000 less in excess of 15% of the claimed amount. They will pay the claim in March. So when we are talking about an excess fee, usually when you claim from insurance, you have to pay something before you claim. This is just an insurance practice to ensure that people don't take advantage of their insurance. The excess fee for the 20,000 worth of trading stock works up to be 3,000 rand. This is what you have to pay to the insurer before they process your claim. So when we look at what we have lost in terms of value, we have lost a total of 9,000 rand. The first is the 6,000 rand cash that was not insured. There is no way we're ever going to recover the 6,000 rand. It's gone. And the second part of the 9,000 rands that we have lost is this 3,000 rand. The 20,000 rands, although it was stolen, the value of the stock is going to come back in the form of an insurance payout. In terms of value, we did not lose the 20,000 rands because the insurer is going to pay us that 20,000 rand back. If this robbery did not take place, we wouldn't have had to pay the 3,000 rand to have the insurer recover our stock amount. Statement of comprehensive income, there you have it, loss due to theft. 6,000 rand, this is the cash that we lost because of the robbery, which is the excess that we had to pay. The next adjustment that we have that affects trading stock is adjustment number 6. Return 24,000 worth of stock to a creditor as it was not compatible. They agreed to credit our account less a handling fee of 1,200 rand as per their returns policy. We bought stock from a credit supplier. We did not like the stock, it wasn't compatible, and we had to return it. But they charged us money for returning that stock. So this 1,200 rands that you see here, it's an expense. It's the handling fee that we were charged for processing a return. We can call this account in the statement of comprehensive income just handling fee. Handling fee of 1,200 that we were charged. Trading stock to the value of 43,000 rands was used for demonstration purpose during the year. This must now be revalued at 21,000 rand so that it can be sold at a profit next year. This is a portion of our trading stock that we use to demonstrate to our customers. If you've shopped for shoes, you'll see that in retails, they have some of the shoes on display. So the demonstration stock is included in this figure, in this trading stock from the pre-adjustment trial balance. But valuing it at 43,000 rand is misleading. It has to be revalued. We want to reduce the value of the stock because it's been sitting there on display for the whole year. It's probably sunburned and it's not in a great condition to sell at the current selling price. So what we do is we need to remove the part that we are writing off, right? The stock is still in our business. Reduce the value of the stock to 21,000 rand. Revaluation of stock 43,000 minus 21,000 rand, 22,000 rand. This is the loss of value of the stock that we had used for demonstration purposes. Lastly, the adjustment that this video is about, adjustment number 10. The annual physical stock count revealed the following was on hand. Trading stock 2,364,000 rands. So when we talk about the annual physical stock count, what we're saying is that we looked in the storage, we have counted stock in the storage, and we are certain the amount that 2,364,000 rands, right? The problem is that on our pre-adjustment trial balance, we have a different figure. What we need to do is reconcile the amount on the pre-adjustment trial balance with the amount from the physical stock count. If you look at the pre-adjustment trial balance amount, you'll see that there you have trading stock worth 2,467,000 rand, which is obviously different from the one from the physical stock count. Before we start calculating if we have a trading stock deficit or a trading stock surplus, we first need to have a look at all the adjustments that affected stock and adjust this value here that we're seeing on the pre-adjustment trial balance. You can think of it this way. The amount on the pre-adjustment trial balance is what we started off with, and these adjustments here are not accounted for. So we need to look at these adjustments and see how they affect the amount on the pre-adjustment trial balance. And then when we have that figure, we compare it to the physical stock count one. So the first one, we have a robbery that happened and 20,000 worth of stock was stolen. So what we need to do is remove this 20,000 worth of stock because it is assumed that it is in this amount here. Removing that amount because it's no longer part of our trading stock. It's gone. It was stolen. And when we move to adjustment number 6, we are told that we return 24,000 rands worth of stock to a creditor. A part of our stock that was in storage is also included in this amount on the pre-adjustment trial balance. That 24,000 rand is somewhere in the 2,467,000. But we returned it. It's no longer part of our stock, so we need to take it out. Our trading stock deficit, we have the amount on the pre-adjustment trial balance. That is what we started off with. And then we realized that 20,000 rands worth of stock was stolen. It's not part of our trading stock. And then we realized that 24,000 rands, we had to return it to the supplier. It's not part of our stock, so we need to remove it from that amount. And lastly, the stock that we used for demonstration, we decided to revalue it, and that resulted in 22,000 rands loss of stock value. And now that you have the total amount, you subtract the one from the physical stock count, and this will give you a total trading stock deficit of 37,000 rand.